Hey, I wanted to come on here before you guys listen to this interview between me and Karen, my interview guest for today. I want to explain something to you. Unfortunately, and it's due to technicalities, whenever I'm speaking, there's a lot of background noise throughout the video. I was going to actually scrap the video, but when I was editing the video, I couldn't help but noticing all of the great gems that Karen had explained with regards to some of the questions and so forth that I've asked her. Karen is an expert in down payment and closing cost assistance. She's been in the business for over 23 years. So try your best to get over the audio background noise when I'm speaking and listen to what is actually being said. Let's get to the interview. How are you guys doing today? Today I am so excited, so elated, so excited because I'm listening to you guys as my audience. I've been doing credit repair, as you guys know, for about 2 years, and I've done hundreds and hundreds of consultations. 98% of the people that I speak to, when I talk about short-term goals or long-term goals, which is one of the questions I ask in those consultations, a lot of you guys all say that you want to buy a home, whether it's a short-term goal or a long-term goal. That's one of the main things that I always hear with regards to getting your credit fixed and so forth. You want to buy a home. Now, I know a little bit about buying a home, but I don't know as much as this person that I'm going to bring in today. I'm excited to bring her in, and who I am talking about is Karen Buelterman. My name is Jay, and welcome to Ask a Debt Collector, a subsidiary of Clear and Strategic. Now, I've been in the debt collection industry for over 15 years. I've done it all, from management to owning 2 debt collection companies. Over the last 10 years, I've been the go-to guy for friends and family for questions regarding debt and credit. Now I want to be that person for you. If you have any questions, put them down in the comment section. I promise I'll answer those questions. Let's go. Awesome. So Karen, can you tell us who you are, what it is that you do, and how long you've been doing it for?
Yeah, absolutely. I'm Karen Buelterman. I work with a brokerage house called Arbor Financial Group, and I've actually been in the business going on 23 years now. So there is a difference between a broker, a banker, and a direct lender, but we can get into that later.
Perfect. And that's actually one of the questions that I have here. So, nevertheless, Karen doesn't know I was going to do this, but I didn't want to tell her I was going to do this before. But if any of you guys have had a consultation with me, you've watched any videos that I've put up on YouTube through Askadebtcollector, or anything with regards to credit, questions asked, emails, and so forth, if you've seen any of those things, I always let Karen know this, but I want to let you guys as an audience know that the reason why I did credit repair, or I got pushed into credit repair, or even better, the idea came up and I was actually encouraged to do it, was by Karen Buelterman. I met her probably about 5 years ago, 6 years ago at the networking group.
Yeah.
And at that time, I owned a debt collection company. And those of you who watch my videos, you know I've been in the debt collection industry for over 15 years. During that time span, when I met her, obviously she knew me as a debt collector. We ended up meeting, and I just threw, when she came to my office, she came all the way up to my office at the time, and I told her, I'm thinking about, possibly doing credit repair. She saw the credit repair book, and she encouraged me, said, you know what? I think that that's something that you should do. And because of her, and obviously work and stuff that I had to do, if it wasn't for her, to be honest with you, I probably would have went in a different angle or different arena. But she put that batter in my pack to do so, and now it has grown to what it is now. And so I want to thank you, Karen, and let everybody know that she's one of the reasons why I went into credit repair 100% of the time. So thank you for that.
You're more than welcome. I knew that you would be your personality is just set for this. It's just, and you're so smart and you're so good at what you do. It was just
Right.
a perfect.
So the next thing I want to talk about before we start getting into the stuff is I want to bring up the networking group that we're into currently right now, which is called TEAM. The acronym stands for Together Everybody Achieves More. I want to bring this up because if you've watched the last video I did with Brandon, who was in small business banking, that's where I met him. I happen to know him through high school, but Karen is the one who actually invited me to this networking group in order to come here. And so I want to say this for those of you who are entrepreneurs and that you're looking to join a network. Team is an awesome network. In order to do so, I will put the information down in the description of this video. I don't care where you're at nationally, you can find a team organization to grow, to join, and to network with regards to that. And because of this, when you're brand new and if you're doing anything on social media, I remember one of the things I always wanted to do was interview people. And unfortunately, when you're brand new, you can't call up somebody and say, "Hey, I want to interview you." They don't know you from Joe Smo. And so a great way to get around professionals in your area would be going through a networking group. And one of the networking groups that I recommend is Team. In this group, I am the chapter tech. And then Karen, what is it that you do in our group?
I'm an ambassador, so I welcome visitors and make sure that they understand about the networking process and just make them feel comfortable.
Awesome, awesome. So our group is about 10 people. We're a very tight knit group. We all love and know each other, and it's more than just about referrals. And obviously, that's the main focus of the of the networking group is to refer individuals in business. But in this case, it's pretty awesome because you get to know each individual, and obviously, you don't want to refer any business to somebody you don't trust. And so, by having this network, it helps with regards to that. If you're interested in Team, I will put it down below in the description. Click on that. Check out the website. Check out our actual franchise owner, which is Laura. But it don't matter where you live in the United States, there is a team near or close to you to join. So now that we have that aside, let's get into mortgages in general. So the first question that I have for you is, can you explain to our audience? So I'm going to start at the beginning. I'm thinking we may need to come again because there's so much information and so forth that you have with regards to that. But what I want to talk about in the beginning that I don't think a lot of people talk about is this. Can you tell me the difference between a real estate agent, a mortgage lender, and if you can throw in there the underwriting and what that actually entails?
That's actually a terrific question, and no one has ever asked that before. So I told you, you're so smart. So a real estate agent either lists homes to be sold or they work with buyers to help them buy the house of their dreams or their wishes. So they deal strictly in the collateral or real estate. I work in financing for them to get that house, their dream house. Or if they already own a house, I help them refinance either to get a lower rate, get cash out, et cetera, et cetera. But that's what I do. I deal in financing. So the underwriter, um, that person actually reviews the file manually and goes over what the lender that they're working for's risk and make sure that that borrower meets those guidelines and make sure that everything is done correctly and reviewed and make sure that the terms these days is the ability to repay the loan. That's a big difference between 2008 crash and now. And we could, that's a whole different subject, but they're the ones who manually review things for their company and for their investors like Fannie, Freddie, FHA, VA.
Awesome. So I thought that was so important because even within the home buying process, a lot of times when you start out, you're like, okay, well, I want to buy a home. What do I do? Well, I look for a real estate agent. Okay, cool. You look for a real estate agent. Then you're like, wait, there's more to this. Now you're passing me to a mortgage broker or a mortgage lender. Okay, all right. So they give the actual loan. And then at the end of everything, which a lot of people don't know, is that underwriting. So they're looking at everything, they're crossing the T's, dotting the I's, and that's the person that, if something goes wrong, they're going to reject your loan and possibly you're not going to get approved for that loan.
Exactly. And you know what, Jermaine, that's an excellent point to be brought up. And they're wondering, why did the real estate agent pass me off to a lender? More often than not, people go out and look for a house, fall in love with the house, and then they find out if they have the financing for it. Can they afford it? Is there an issue with it? Are they going to end up to be house poor? So working with a lender first and finding out what you're pre-approved for is paramount. And a good real estate agent will always refer their clients, if they're the buying agent, to a lender to make sure that when they go out and look, they're looking at the right price point.
Awesome. Awesome. So the next question I have for you, which is a general question, and I'm not sure exactly how many loans are out there, but I know obviously a FHA loan, a VA loan, a conventional loan, etc. What other types of loans are there out there that people can actually apply for?
That's an excellent question again, Jermaine. So, in that classification of the regular investors, there's also a loan called USDA. And it sounds so weird because you're going, I am not at Vaughn's. At a store. Why are you mentioning USDA? That back in the 20s, USDA started so they could help people buy in suburban areas, out in the farm areas, out where there's not a bunch of other homes. They had a difficult time in financing. So these programs started out that time to help those that were in the suburban regions obtain loans. And these loans are actually 100% financing. And you don't have to be a vet in order to get 100% financing. However, you have to be within that suburban area. And how you figure that out is you give me an address, I type it into their system and make sure that that particular property is in that area. Because literally, across the street could not be in the area, and on this side of the street could be within the USDA region. So that product is out there. And then these are called qualified mortgages because everything after 2008, things changed. So the underwriting got tighter. Lenders had tighter guidelines to go by. You have to have the any borrower has to have the ability to repay. So they got rid of all of those. They called them exotic loans, where it was 100% financing if you had 500 credit score. Stated loans, where you could literally be making $1,500 a month, but you stated you made 10,000, right? And you stated you had 100,000 in the bank. So they got rid of all those programs. However, they did start bringing them back slowly. And so they have what's called a non-qualified mortgage, where you're outside the realm of Fannie, Freddie, FHA, VA, and USDA. So they have their own guidelines and their own money. So they create their own guidelines. So if you're self-employed and you couldn't be approved by Fannie or Freddie, these lenders actually have expanded guidelines to where a lot more people can get loans. Again, you have to have the ability to repay the loan and prove it. Whether you put down 50%, you have an 800 credit score, you have money in the bank, or various other circumstances where you can qualify for these expanded guidelines, as long as you have the ability to repay.
Awesome, awesome. So, obviously, you've been doing this for 20 plus years. What loans in particular do you specialize in? Is it all of them? Is it some? Or which ones are let me ask, the last five or six clients that you actually have, what type of loans were those that you were approved for? They were approved for, clients were approved for.
Exactly. So, interesting question. It, those types of, I do the loans that are like the depending on what the economy is doing, if the lending is tighter or not. So, good point. So many people make good money. They just don't have the funds to put down the down payment with. So the number one thing, misconception for people is that you need 20% down. That is so far from the truth, right? So you can put down as little as 3% on different types of loans. And you know what? I forgot the original question. Sorry, I started going off a
Yeah,
tangent.
no problem, no problem. So, well, you basically answered it. You said depending on what is going on in the economy is typically the type of loans that you're going to be, uh, for the most part, looking for with regards to clients and getting them approved for, right? What type of loans would you say that you're getting? FHA loans, conventional loans, VA loans. What type of loans are you getting on a normal basis, or at least the last 5 to 10 clients that you've had?
Every loan that I've done has is different. A jumbo loan. I did down payment assistance loan. It's called down payment assistance programs where they you have different government programs out there that offer fund. That's where I was getting at. That they offer funds to help you with your down payment and closing costs. Sometimes it's both. Sometimes it's one or the other. But literally, last month they came out with a program where the government gave 20%, and it was literally a grant. You never needed to pay it back. So they offered this. It was literally those funds were gone of $300 million in 8 days. That's
Wow.
the demand out there because, like I said, people make money. They just don't have the funds for the down payment and closing costs. So down payment assistance is very popular right now just for that reason. And with the prices going higher and higher, that it precludes a lot of people from being able to afford homes. So these programs, like that 20% down, was amazing. But I work with so many down payment assistance programs. It would take a whole nother program to go over them all, but it is out there.
Awesome, awesome. So down down payment assistant is probably hugely a lot of clients that I come across who need their credit repair. One of the things that's sort of kind of tough is having the funds, $10 to $20,000 saved up to obviously put down on a home, and then obviously, as we know, we live in California, so the costs of homes are a little more expensive than average places. With regards to that. Now, the next question that I wanted to ask you about, and I remember I texted you about this because I saw something on social media talking about today's new fee structure and so forth. And you gave me some great insight with regards to that. Can you explain a little bit about that new fee structure that was passed, I believe, about a week ago, and who it affects and doesn't affect?
Good question. So this program it, was supposed to be started by Fannie and Freddie 3 months, 2.5 months ago, and it's still the worst time ever to have this roll out. But it was even worse 2.5 months ago because rates were actually higher. So what they did is they wanted to level the playing field for those who had high credit and high amounts of funds to put down to those who had lower credit scores and not 20% down or 10% down to put towards a down payment. So they tried to level that by increasing the rate a little bit by those who had higher credit and more money and decrease the rate just a little bit for those who didn't. So what they tried to do is create more first time home buyers and the opportunity for those who didn't have the best credit or didn't have the funds to be able to buy a home. I understand the basis of it, but number one, it's come at the wrong time. Number two, the media took that and ran with it and made it sound like no one can buy a house. The fee structure is outrageous. You're going to get dinged for having great credit and a lot of money, and we're giving to those that don't. However, it does level it out quite a bit. I just don't think that the fees for the higher credit scores and the more down payment are right. I mean, I hate to sound like that, but I just feel that it could have been a lot less of a hit to the rate for those that are doing the right thing. but it is giving to those that don't have the funds, or just trying to get that credit. So everybody needs to be referred to you to bring their credit up.
Awesome, awesome. And then another thing I remember that you stated, because one of the popular loans that I hear a lot of times is an FHA loan, right? And that's where you're putting, if I'm correct me if I'm wrong, 3.5% down. Now,
Yes.
this one of the things you stated was with this new mortgage fee structure, it wasn't for those type of loans.
No, not yet. They're
Okay,
talking about it to implement it with FHA, but they haven't started it yet. And
okay.
another thing is, if you have first time home buyer, if you want to go through a first time home buyer product with a down payment assistance, you do not have those hits whatsoever.
Wow. Okay. So it doesn't matter. Ultimately, you still want to have good credit, but if you do have good credit, you won't be penalized. And if you do qualify, you won't get the benefit of it.
Right. So what happened is, I was listening to a blog the other day, and he said, "I'm actually." It was from a lender, and he says, "I'm actually getting calls asking me if I should miss my payment so my credit gets decreased." And no, absolutely not, not. Now the thing is about lending, just because this has been started as of May 1st, it doesn't mean it's going to stay forever. In our industry, it's totally fluid. So it could end in 6 months, it could end in 6 years, it could be scratched altogether. You never know. So I don't want people to be discouraged because things change. I mean, I got an email from someone I pre-approved 6 8 months ago, and he said, "What's going on? What should I do?" I said, "Absolutely nothing. Things change. Let's When you're ready to buy, let's see what happened, what the guidelines are at that time, because it is so fluid. Nothing is set. So what we're saying talking about today could not be true in a month."
Awesome. So yeah, that's legislation and everything that's changing. So the cool thing, one of the things that I love about you, Karen, is you're never one to get bitter about what's transpiring. You hear what's happening and you adjust. And then you understand that hey, it may change and you're gonna have to adjust that way. And this is why I brought you on, because I know in a time where a lot of people are nervous, including myself, with inflation and everything that's happening, it takes experts to explain situations, because now we're in the day of social media, and you see one little post, you see me, I got it, and immediately I was like, all right, who do I know who knows? Ah, Karen, let me text her, and then you put me right at ease. So I love that.
It's true. And you know what? There's actually more misinformation on the internet and on social media than correct information. So
Right.
you do want to contact people that have been doing it for a while, that are seasoned, who know what they're talking about, and educate themselves so I can educate my clients.
Right. Perfect. Perfect. So one of the things you do on social media, and it's more of a local situation, and I know a lot of you guys is on a national situation, but you're always picking up what's going on in the real estate for the last month or whatever the circumstance is. Can you give us a little bit of what's happening in the real estate industry as a whole?
Yeah, so I just talk about what is happening right now, local, again in San Diego. They instituted a new program where you could build within 1 mile, and they're trying to expand that, of public transportation in dense areas. You can build on a single family home up to 9 more units, and you don't have to provide parking. The zoning is different, even if it's zoned a single family 1 unit. So things are changing as far as that's concerned. Why? Is to help home ownership. Um, we always call about affordable housing. Affordable housing can mean two things. Affordable housing is good, is decent rent, or it could be, hey, you can buy this house in this complex, and they, what's called a deed restriction, they allot a certain amount, a certain number of those units to be sold at a lower price to help those who can't afford $1 million house. The average price in San Diego is 900,000, right? So that is what's going on right now. In my area, I live in Bayho Bay Park, the Marina Boulevard. They just added a trolley line, and within that trolley line is that 1 mile. And so what they're trying to do is tear down all these commercial areas, build high rises, and that's another thing that's going on is they have height restrictions right now. So they're trying to release that. Home prices. Everybody about 6 8 months ago, I got several emails saying we're waiting for the crash to buy. That could be farther from the truth. There is no crash. It is not like it was in 2008. Home prices may not go up 20 to 30%. They're going to go up 3 to 5%.
Awesome. That's crazy because that was the next question I was going to ask you. I remember, and I was guilty of this. I remember in 2008 when everything crashed, I was working in collections. I remember how easy it was for people to buy homes at that time span. Like you were saying, the no doc or you put whatever doc. I remember that. People putting cash in an account just to show that they have money in the account or whatnot, and only making $1,500 getting approved for the home. And the thought process was is they would buy it, and then before that balloon payment comes, they'll refinance it because it'll go up in value. And unfortunately, that didn't happen. So you're saying this time around, that's not the situation.
Not even close. First of all, lending is tighter. That will, you can never say never,
Right.
but the loose guidelines that were with those stated no doc and all those different programs, that's not going to happen again. The home prices are going up; they're not plummeting. The foreclosure amount is 0.14% of all the loans out there. When right after 2008, almost every single loan I did, they were buying a foreclosed or short sale home.
Mm. Makes a lot of sense. Makes a lot of sense because a lot of people were trying to get cash happy and thinking that that same situation was going to happen. But unfortunately, this is a lot different. Lending, underwriting is a lot still tough, and they're not trying to have a situation where they're going to have to bail out these big banks in a situation like that again.
Exactly, and plus the values are there. Everybody has equity, at least 40. Not as an average 40% equity. So you're
Mm.
not why would you be foreclosed upon? They would
Okay.
sell.
And the last question I have for you then is for people who are trying to wait for the perfect time to buy. We hear that all the time. When, in your opinion, 20 years plus, you guys, when is the right time to buy?
When you're ready.
Mm,
It's like timing the market. You don't know when the market is going to go up into or when it's going to crash or when it's going to go back up again until it starts, right?
mhm.
It goes down. You're trying to or when it's going up, you don't know, when the best time is to buy until it starts coming down. Then but it's already occurred. So the best time to buy is when you're ready. You have the funds. You have a program that can help you with the funds. You're ready to move and you do it because you know what? By waiting, there is a cost.
By waiting, there is a cost. That makes a lot of sense. Okay, so if people want to get in contact with you, and I'm going to put the information down in the description as well, but tell them how they can get in contact with you.
My phone number is 619-972-5507. My email is karenb at arborfinancialgroup.com. So arborfg. And I'm on LinkedIn. I'm on Facebook. I have videos up on YouTube. You can get a hold of me. And then through Jermaine.
All right. So, yeah, if you guys want to get in contact with her, I definitely will put all her information down below. I didn't know you had YouTube. I didn't know you
I,
had videos. I'm going to have to go subscribe to that. Give me the handle for that. I'm going to put that in there. Let me tell you guys, a great wealth of knowledge. Even just questions. I've asked her billions of questions, and
yeah.
and her energy is no different. Sometimes you go to people and it's like, they're not gonna buy, so I don't want to waste my time. With her, it's not that way at all. She's an open book, always willing to give you whatever's going to be the best situation because she understands that by giving you that knowledge, you're going to remember. And when it comes time to buy, when you're ready to buy, like she said, it's when you're ready to buy, then you go and see Karen at Arbor
Thank you.
Financial. Thank
Thank you.
you, Karen, for joining me today to give this information to all of the people that I have with regards to credit repair. I can only give so much knowledge, and that's why I want to bring you guys professionals in that industry. And as you can see with her, 20 years plus. So she's seen the market up and down and side and around. So she understands it. Thank you, Karen, for joining us today. And I will put her information down below.